Hi, and welcome back. Chapter 11. Now we get to talk about the Federal Reserve System and monetary policy. So if you recall from an earlier video, I wrote on the board, I said, fiscal policy. What is fiscal policy? Fiscal policy is changes in government spending and taxation to affect, certain economic outcomes or to achieve economic goals. And it's controlled by Congress. Monetary policy are changes in money supply and interest rates, again, to affect economic outcomes or achieve economic goals, but it's controlled by the Federal Reserve System, or the Fed. So let's talk about the Fed just briefly. The Fed was created by the Federal Reserve Act of 1913, okay? So really, if you think about it, not that old. Now, the nation's been around for, 250 years, something like that. But we've only had, the Fed acts as our central bank. So we've only had a central bank for about 100 years. No, it's a little bit more complex than that. I'm not going to get into it right now. Fascinating history beginning with Alexander Hamilton and the creation of the original Bank of the U.S. and how central banking sort of fell in favor, then fell out of favor, then fell back in favor, and then fell out of favor for about 76 years. But in 1913, because of a financial crisis that began in 1907, I believe, again, the political climate was such that the Federal Reserve Act was passed, and it created the Federal Reserve System. Now, when the Federal Reserve System was created, its number one responsibility was to be the lender of last resort. Okay, so recall in a previous video, we defined banks as institutions that accept deposits and make loans. And in that respect, the Federal Reserve is a bank, because it does accept deposits and it does make loans. But it does not accept deposits or make loans to private households or firms or businesses. It is the bank that services other banks. So it's the Fed that accepts deposits and makes loans only to other banks. And the history, banking history in the U.S. is, I think, fascinating because it's a sort of a series of successes and bank runs and all kinds of stuff. But again, what happens when a bank gets into trouble? And by trouble, I mean what happens when a bank's liabilities exceed its assets? Well, it's got to get a loan. And where do banks go to get loans? Other banks, right? Because that kind of makes sense. That's good business sense to loan money to other banks. But what happens if you're a bank, you're in trouble, and you need a loan, and there's no other bank to give you a loan? Well, then that's when the problems start, and we start talking about liquidity issues and going out of business and etc. So the Fed, again, was designed to be the lender of last resort. So if a bank got into trouble, the idea was if nobody else would loan them money, the Fed would. Now, how's the Fed organized? It's organized sort of in two broad sort of groups or entities. The first is that there are 12 districts. So the U.S. is divided into 12 districts. We're fortunate here in the Dallas-Fort Worth area because we're in District 11. So we have a Federal Reserve Bank in Dallas. And if you're ever bored sometimes, go to their website and look what kind of jobs they have available. You'll be amazed at how many of them aren't sort of either related to banking or just sort of tangentially related to banking. But that's kind of a fun exercise. Each one of those districts has a Federal Reserve Bank. The other entity, or the other part, are the Board of Governors. So the Board of Governors. The Board of Governors, I believe there's 7 of those. And here's what's interesting about the Fed, right? Because, especially if you're one of those sort of conspiracy theorists, the Fed is right with all kinds of things. So, if flat earths and Area 51 or sort of intrigue you or float your boat, then man, there's all kinds of stuff to sort of look up and learn about the Fed. The Fed is the central bank for the government, for the U.S. government, right? So, ergo, it's a government agency, right? Well, if it's a government agency, what branch does it fall under, right? We learned this in, what, 8th grade? So executive, judicial, legislative, where does the Fed fall? Well, it doesn't, right? It doesn't fall under any of those branches. In fact, what happens, I don't know how, with what frequency, I don't know if it's quarterly or annually or whatever, but periodically the Fed goes to Congress and says, hey, everything's fine. And then Congress goes, okay. And there is actually no government oversight of the Federal Reserve System. Now, those that are pro-Fed and support the Fed will say, well, that's good, right? Because it keeps the Fed from being political. It forces the Fed to be apolitical, meaning they don't cater to or pander to any one political party. Those that are sort of con or anti-Fed go, whoa, that's, the entire money supply of the U.S. is in the hands of an entity that has zero government control. So, again, interesting to think about and talk about, but we're not going to get into that. I'm not going to go down that road right now. But what I am going to point out to you is that the Board of Governors is actually the only government part of the Fed, right? Board of Governors are that's an appointed position, and the paycheck comes from the government, and so there's your government part, your public part. The 12 districts are not actually government entities. They're technically private banks. Now, they're private institutions that operate within a federal construct, but they are in fact not government entities, okay? And that's the overall structure of the Fed. Now, let's talk about a couple things. The Board of Governors. The Board of Governors is run by a chairperson, chairman, chair. And the current chair of the Federal Reserve is a fellow by the name of Jerome Powell. That might be good to know. So, as such, Jerome Powell has control over the entire Federal Reserve system, right? Now, let's talk very briefly about what happens, because in the 12 district banks, what occurs is what a previous chairman or president of the Dallas Fed used to call factory work. Okay, so what occurs down the road in Dallas in the Federal Reserve banks in terms of factory work are things like issuing new currency, check clearing services. They'll hold deposits from member banks. We talked about that. They'll make loans. They collect data. That Fred tool that I've talked about, that's run by the St. Louis Fed. All of the agencies, though, research economics and have that economic data and the things that they do. But that's sort of the factory work that gets done at the Fed, and that occurs at the district level. So what does the Board of Governors do? The Board of Governors, listen, the Board of Governors is primarily in charge of monetary policy, and they do that through an organization called the Federal Open Market Committee, the FOMC. And it is actually the Federal Open Market Committee, headed by the Board of Governors, that executes monetary policy or changes in money supply or interest rates to affect economic outcomes. Now, who are the voting members of the FOMC? This would be good to know. The 7 governors, they get a permanent voting spot. The president of the Federal Reserve Bank of New York, and then 4 Fed presidents, and it rotates. Okay, so 7, 8, 12, right? Did I do my math right? There are 12 voting members of the FOMC comprised of those individuals. And if it seems funny that the guy from New York or the person from New York gets a permanent seat, it's because that's where monetary policy is actually executed from. So we'll get more into that in the next video. But I'm going to stop right here and let you digest this. Go get a Diet Dr. Pepper and a Snickers bar and come back for part 2.